Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, in this video today, we're going to talk about the cash secure put. It is basic cash secure put training. I'll tell you what, absolutely love the cash secure put, where we can start many of our trades, where we collect that premium up front. If we're not assigned the shares, that's okay. No harm, no foul. We look to do another trade. But if we are assigned the shares, we're paid up front because we gave somebody the right but not the obligation to assign us their shares. The cash secure put is my favorite way to start a selling premium trade. Whether I do it in a short time frame, maybe a week, or 30 days. I'm going to show you in this video an AMD trade that absolutely would have worked out perfectly. Because I recorded it 2 days ago, AMD is now moving some 5 points higher. I don't know what's going to happen with that trade. We're going to monitor it. It's about 31 days. But in this video, I'm really going to show you how a cash secure put works and how we want to use the cash secure put to potentially start every selling premium trade, collecting that money up front. And then if we're assigned the shares, we have another plan of writing a covered call some 30 days later. What I'll tell you is this: I want you to watch the part of the video where we talk about where we like to place our strike prices. You know, the stock is trading for about 114 in this video. I show you exactly where we're going to stick our flag for a cash secure put strike price that I believe was going to pay a decent amount of premium, and it makes it very favorable for us to maybe not be assigned the shares higher. Hey, look, I want you to stick around for that. And look, while you're here, if you like anything you hear today, I want you to subscribe to the channel. It's right there, it's free. And hey, look, more importantly, if you like this video today, bang that like button. It lets me know you like what I'm doing. Hey, welcome back everyone. It is time for another red hot covered call video. Today we're going to talk about the cash secure put, and I'm going to show you a strike price that is favorable when we do our initial trade setup. Real quick, the cash secure put is simple. We have the money to buy somebody's shares. Instead of going out and buying 100 shares of AMD stock, AMD being the company we're going to talk about today, we're going to let the greater stock market know that we'll buy their shares. Now we're going to pick the price we're willing to pay. We're going to tell the greater stock market they have a time frame or an expiration date to assign us those shares, and they're going to pay us a per share premium. Now you have to have 100 shares of cash to do this, right? Because I'm going to buy 100 shares from somebody. Now, how this trade ends up, we're not going to talk about that. It gets a little more advanced. But the trade setup is this. I have the money to buy 100 shares of AMD off of somebody in the greater stock market. I'm going to pick that price, and I'm going to give them 30 days to make that decision. They're going to pay me a per share premium. 100 shares times the premium we can collect. And I'll tell you what, we can pick up about $3 per share, or $300 in total in cash secure put premium. Now, if the stock trades below the price I pick, I'll be assigned the shares at the price I pick. We're going to talk about the trade setup for AMD, a cash secure put, for the next 30 days. So let's go ahead and look at the chart. I'm going to show you why we're picking a particular price for which I'll buy somebody's shares. And let's talk about the expectations. So AMD is a chip maker, and it is red hot to be a chip maker these days. So the stock has had a tremendous run up, and now it's trading in its range. Kind of a sandbox, as I call it. I'm going to show you their sandbox here in a moment. So what we need to do is identify its trading range before we put it out there that we'll buy somebody's shares at a price we pick. Because if we do not understand the range, we might be setting a price for which the stock could still be moving lower, right? Because the stock's trading for $115 right now, $115. I'm going to set my price for which I'll buy somebody's shares much lower. Okay. So we have to make sure that when we fast forward 30 days, we want to try to have predicted the stock's movement to where it's trading above the price I pick, because I don't want to really be assigned these shares. What I want to do is pick up that premium being around $3 per share or $300 for this investment. We have to pick that price. So what price am I willing to pay for AMD? We want to look at the charts and some stock indicators to help us. Okay, so one of the things we're going to talk about is a stocks sandbox. Now, as you can see, stocks trade in a range. Now, AMD trades in very nice trading range, and this being the last one. And as you can see, it traded around 80 to 110. And as the markets move higher, AMD moves higher with the market. And now its new sandbox seems to be 130 to 109. So now this is its trading range. So when we get involved in stocks, we don't want to get involved in stocks when it's trading highest in its trading range. We want to find ourselves in more favorable positions, getting involved when they're trading in their lower 25 percentile of their trading range. This being AMD's new trading range. So if I'm going to get involved with AMD, meaning I'm going to make an investment, I want to be in the lower 25% of its range. Now, it's trading at 114.79. Where do I want to own AMD shares? When we look at its recent trading range, what we see is this. When AMD broke out, when it broke out of that line of resistance, now it moved into the next part of its trading range, the 130 to 110. Well, now it's trading in this sandbox. So what is the trading range? Well, we know the max side of that is 130, and we know the bottom side of that is around 109. Okay, so 109 being the bottom, that's where we want to plant our flag. Okay, we want to plant our flag near the bottom of the range. I don't want to own AMD shares at 130 and then have the stock fall to 109. I would rather own the shares at 109 in the hopes that it moves higher. So when determining a cash secure put and what we're going to do, we really want to identify its support line in its sandbox. This being AMD's sandbox. It's 130 to 109. We want to see if we cannot put a cash secure put bid at 109. Well, we can, and we're going to do 30 days. So when we place that trade right here and we tell the greater stock market we'll buy AMD shares at 109, we're giving them 30 days, whoever this person is that owns the shares. So when we do that and we say, okay, I'll buy your shares at 109 and I'll give you an expiration date of August 18th, meaning you have to assign me your shares by August 18th, or you don't have to assign me your shares. Remember, when we sell the right, or we sell a cash secure put, we are essentially selling an obligation to buy their shares at 109. So we have to have the money of $109 a share. So there's somebody on the other side of that trade that actually owns shares of AMD, and they're willing to take my bet. They're willing to pay me $3 per share for the insurance. So let's think about the person who owns the shares. They own the shares at AMD right now at 115 because that's where it's trading. They can't lose any more than 109. So they go out to the greater stock market and say, who's willing to buy my shares at 109? And they see my hand up. Now for them to essentially own the right to assign me their shares, they're going to pay $3 per share or $300 for this total investment. Now they have the paper to assign me those shares at 109. I have the obligation to buy the shares at 109. So my money to buy 100 shares at 109 gets set to the side. My brokerage won't let me trade that money. Now the trade's on. I put it out there. I'll buy your shares at 109. You got 30 days. You paid me $3 per share. I pocket $300. I don't give up that $300. That goes in my pocket. Now the trade is on. And the question is, where does AMD trade over the next 30 days. If AMD trades below 109, the person that has the right to assign me their shares at 109, they will. Because remember, AMD is trading below 109, so they're getting 109, and AMD is trading lower than 09. If AMD is trading above 109, well, they're not going to give me shares at 109 when they can sell them on the open stock market for more. So typically the way it works, the 109 is essentially that line where if the stock finishes below, they assign me the shares. I have 100 shares of AMD at 109. If it does not finish below 109, then I keep the $3. Now I keep the $3 regardless, but now that money to buy 100 shares at 109 comes back into my account, because the person who owns the shares, they are not going to sell me their shares at 109 when they can sell them for more. So that's the essence of a cash secure put. Getting back to AMD, we have to identify the sandbox it trades in. And right now, 130 and 109. A little bit of technical analysis here will tell you that it bounced off of 109 and moved higher. And once it broke resistance, right, as the stock's moving higher, and it breaks resistance here, this now becomes support. And sure enough, when it peels back, where does it bounce? Where does Wall Street come buying? Back here at 109. And it moved higher. So 109 is where I'm going to plant my first flag. And what I'm hoping for is that the stock continues to move higher and I'm never assigned the shares. $3 on a $109 investment. Let's take a look at that. I got my calculator up. 3 divided by 109 in 30 days represents a 2.7% cash on cash gain. I invested $10,900, made $300, and that represents almost 3% in a 30-day window. It's just that simple. And we do this over and over again. There's 3 outcomes per trade. We win 2 of them. Think of that. 75% chance of success. That's why if you learn the selling premium investment strategy, you can win 2 times out of 3. It is a great way to generate cash flow. I make $300 upfront in cash flow I can spend. We do this every month, and we do this on multiple stocks. Think of it like real estate. AMD represents a real estate property I own for which I rent. I make $300 a month. Do you see how you can use stocks in this scenario? AMD would represent a property for which you've only invested $10,900. You don't have to invest thousands upon thousands to get involved. And you're not dealing with the messiness of owning real estate. You own a stock for 30 days for the most part. You could either reinvest or move on. That's why using the selling premium investment strategy can generate more near-term cash flow, more cash on cash percentage gains than owning real estate investment property. It's like I'm printing money. You learn it, you too can absolutely enjoy the benefits of free monthly cash flow. I'm going to leave it right there. If you have any questions, you're interested, email me, DM me. I'll take those questions. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.